Good morning. I'm Martyrossian of Aubrey Capital, and given that each of you now is back into your stride for the coming year, I thought it would be timely just to give a brief presentation about how we at Aubrey see the prospects for emerging markets. I'm joined today with my partner, John Ewart. Many of you know John pretty well, but for those who haven't come across his sunny Presbyterianism before, he is one of the fund managers on our emerging market strategy and has had his hand on the tiller with Andrew and Rob since inception back in 2012. I'm delighted to report that the Aubrey EM strategy returned 11.5% last year, which represents a decent chunk of alpha to add to our long-term performance. Perhaps, John, you could start by giving a brief description about where this performance came from.
Yes, indeed. Thank you, Mark, and good morning, everyone. The performance was primarily driven by stock selection, as you would expect. And for those familiar with the portfolio over the years and our existing investors, over 80% of our alpha is generated from stock selection. And India continues to be a positive for us. Even in the other areas of the broader GEM universe where there was a degree of disappointment, such as Latin America, for example, our stock selection was actually positive. So the stock selection has been very encouraging. Our asset allocation was a slight negative over the course of the calendar year, and being less exposed to China when it had the rally at the end of September on the back of the government stimulus announcements was one of the primary reasons for that. But as you would expect, and encouragingly, stock selection continues to be the key.
Okay, perhaps a word on how the portfolio is set up just now, John, and that can lead us naturally into the prospects that you're particularly keen on in the coming months.
Yes, indeed. When you look at the structure of the portfolio over the last 12 years, we've always had an enthusiasm for those large areas of population where the consumer is in a position to earn more money and therefore enjoy spending that money. And we've seen that transition prove to be successful as investors across countries, actually over decades as investors, but specifically within the Aubrey GEM strategy over the last 12 years. So India and China tend to be countries where we spend a lot of time. Clearly large populations, but there are also more companies listed in those respective markets, which provide opportunity for investors. And India continues to be a favored market for us. And really, since 2014, when Modi was elected, the prospect of reform of the economy and the continuing development of skills within broader industries, the attraction of investment to the country itself, and also the fact that the broader population was actually feeling more optimistic about the outlook for the economy, resulting in them spending more of their money, has contributed to better economic growth, better profit growth of industries, and also the development of new industries, in particular areas such as e-commerce with the adoption of the smartphone. So India continues to be positive. China, by contrast, suffers from the international headlines in the eyes of international investors, but clearly life goes on for Chinese businesses and for the Chinese consumer. And we continue to find ideas in China. And whilst we have a greater weighting in the Indian market than the benchmark, we have a slightly lower weighting in the Chinese market. But we do find specific opportunities, and that is always the focus of our efforts as investors, on the companies themselves rather than on the broader market. And we're certainly not aiming to cover 2,000 plus companies within the GEM universe. Our ambition is to find the 35 to 45 companies that we think are the best allocation for our clients' capital. And across the rest of the GEM region, we tend to be very company specific, but we're cognizant of the influence that an improving political or deteriorating political environment can have on the outlook for business confidence and for consumer confidence. For example, we have limited exposure to Latin America, and the politics certainly have not helped in that regard over the last 12 months. whereas we're increasingly finding more opportunities in Southeast Asia. And we've found a number of companies which we've known for many years, but they're now entering that stage of development and profitability where we think that they look to be attractive investment opportunities.
John, you and I spent a week in the US just before Christmas, and I think it might be interesting just to describe the salient or most common questions we got. And these aren't just particular to the US. We've been picking this up from allocators really on a global basis. The first is, we love India, but surely it's all in the price.
If you look at the Indian index, it is trading on approximately 24, 25 times 1 year forward. And if you look at the history of the market, the average over the last 10 years has been around 21, 22 times. But if you take in the view that the market looked expensive at these levels when it was last at this position in early 2018 and sold the market, you would have missed out on the opportunity of 100% return of your money. So you have to look at the specific opportunities for the companies themselves. Clearly, not every stock has doubled since 2018, and there are many stocks that have performed even better than that. And that is why investors pay active managers to find those ideas. They are available. It's our role to identify and invest in them accordingly. And I think the other consideration for India is that, again, with the Modi coalition re-election in May of last year, we have the prospect of another 5 years of reform and hopefully encouraging support for the broader economy. But there's a lot more business confidence in India today. And that's being primarily driven by the opportunity within the domestic economy and amongst the domestic population. But there are many world-class companies within the GEM universe, but quite a number of those are operating on a global scale, for example, Taiwanese tech companies. So for us, our focus does tend to have a bias towards the outlook for that domestic opportunity. And India certainly looks the more promising at this stage.
If investors love India but think it's all in the price, their view on China is very, very different indeed. There, I think it is, we hate China. Why should we bother investing there at all? How would you respond to that?
Well, we have to accept that China has changed during the period of the COVID crisis and after. And the prospects were far more encouraging pre-COVID. But the Chinese government had not handled the crisis particularly well. There was no support for business or for the wider population, for example. And the extent of the amount of days, months spent in people's houses has obviously had an impact on their psyche. But we're beyond that now. And clearly, the government is trying to make an effort with the stimulus program, and people are getting back to a degree of normality. And we have to look forward rather than weigh on the past. The Chinese consumer is certainly returning to the behaviors that we have seen pre-COVID in specific industries. Travel is a notable area of growth in terms of passenger volumes, but also in terms of expenditure. It's also the case that the government has attempted to create stimulus from incentives and subsidies in areas such as new car sales, but also, interestingly, in areas such as domestic appliances. The average life of a refrigerator is about 10 years, and the government is keen to encourage people to bring along their old model and replace with a new model. And that's been very successful, and we've identified companies that have benefited from that trend. And that program is now being extended into other categories. So there are areas of growth, there are reasons for optimism, but it does tend to be very industry and company specific.
I think the last observation I would make is that with US exceptionalism hitting its stride yet again, a lot of US investors and investors with the US are saying, why should we actually bother too much about EM? Some of them saying, at all. What's your response to that?
Well, for those investors who wish to be exclusively in the US market, clearly that's not a discussion we'll be having with them, because we are advocates of diversification for global portfolios. And even within the other regions of the world, the US, Japan, GEM, that there are differences in terms of expectations or opinions. And we're well aware as investors in GEM that China tends to dominate the media headlines. The reality is that as investors within the Chinese market, we're looking very much at specific stocks, specific industries. So again, it's the importance of that focus on the companies themselves. And that in turn has been shown to generate the vast majority of the alpha that we have delivered for our clients. We continue to think that there are different dynamics in different regions of the emerging market universe. We think India is positive, as we've highlighted, and our approach to the other regions is very much driven by the individual companies. But politics can be an important catalyst in actually providing a degree of enthusiasm for change, as we saw in India in 2014. And certainly over the last 12 months, we saw that it was a hindrance in Latin America with the new president of Mexico not being as independent as perhaps we would have liked to have seen, and very much following the policies of our predecessor. And also now in Brazil, unfortunately, there seems to be an intellectual battle between the government and the central bank, which is not creating an environment which has been positive for the economy at large.
Our last investor on our US trip recommended a book called How the Scots Invented the World. It's a damn good read. Whilst John and his colleagues are too modest to say they're actually inventing anything at the moment, but we do believe that prospects for emerging markets this year are very well underpinned. If any of you would like further and better particulars on anything John has said or our proposition in EM, please do get in touch. Thanks very much. Bye.